I trust you all well. Could be end of day for some of you. Could still be midday for some of you in my zone. Man, what a frustrating morning that we have so far. Well, okay, let me reword that. Frustrating if your strategies are not setting up. Frustrating if you are a swing trader and not a scalper. Tell you why. Have a look at this. This is the UK 100, and the yellow box here is the open of the session. Tail on top, and then big blue, big bull candle afterwards, and then pullback. And I'm always looking at the first few candles. And I figured, trading range open. Let's see, if we get a decent enough breakout of a trading range, pull back to the EMA and see if we can trade it. Sure enough, out of the trading range, got enough pullback, and yours truly is waiting to see if we get back to the EMA and get a decent enough, low test candle. In fact, we have another trading range pullback, which kind of makes me say, now, gotta wait a little bit, because if it's not coming back to the EMA, how do I jump in? Because I want to see a signal. So let's wait again, and boom, we get another breakout above the trading range. And straight after that, I'm saying, okay, let's come back and see if I get at the EMA, and hoping that this would become a bull candle, become a perfect doji. So you kind of pull your finger off the trigger and you wait. And then we go sideways, tight trading range to the pullback. To tight trading range pullback to the EMA. So another trading range, 3 trading ranges. 1, 2, 3. So 3 trading ranges, all pulling back to, now the final is pulling back to the EMA, and hasn't provided a decent enough opportunity to jump into the market. For swing traders, if you're a scalper, of course, scalpers are just going for, couple of points. They probably would have bought in here, exited, maybe bought a few times, but that's not the way that I trade. I try and find these setups that, if I can get into them, and if they go my way, I can make some money, break even, but hopefully make some money. So where are we at the moment? So where we are at the moment, again, you got to remember the price action that we've had. Trading range, breakout. Trading range, breakout. Trading range, an attempt to break above the trading range and failed. So now, after 3 trading ranges, the bulls have failed to continue to break out above the trading ranges. So my question now is, does this trading range behavior mean that at some point, wherever, we're going to have similar trading range behavior going down? Because it's not a strong breakout or trend. It's what would look like, if you look at your charts and say, well, let me try and find trading ranges. It's what would look like, there was a trading range going up to a bull leg in a trading range. There was one. And then with a bear leg in a trading range. So I'm just wondering whether this is going to evolve into a decent enough reversal pattern for me to sell. And if it does, any breakout out of the trading range with a decent enough breakout pullback, I'll be looking to sell that and see if we can carry on and get back to the open. So this magenta line is the open of the UK session. So as far as the exchange is concerned, that'll be getting back to that open. But I gotta wait and see, because although we've had trading range behavior, this is the first time we broke beneath the EMA, and the break beneath the EMA was pretty weak. So the bears failed to put a strong reversal beneath the EMA, which is a bit of a concern. If you're thinking that the market might sell off, but if the trading range gets prolonged, the more candles are added to a trading range, then it weakens the bull case, and hopefully there might be an opportunity to sell off. So that's present where I am. So when I said pretty frustrating, waiting for my setups and nothing coming up, you gotta wait. Quick look on the daily to see if I can give us some information. So this is the FTSE UK 100. As you can see, just by looking at it, we've had trading range behavior for the past 2 weeks. Now, since the beginning of the month, bull breakout, and then bear candle. All of this is trading range behavior because we are staying, the market is staying in the same kind of range. Let me just put it in. So when I say trading range behavior, we try to break out and test the low of the month. And a couple of days ago, we tried to break out. So we had a failed breakout here, failed breakout there. So we are coming to the top of the trading range. So if we come into the top of the trading range behaviors and trading range forces would indicate that somewhere within the zone, the bears would come back and sell back into the trading range. Just as down here, bears would come back, trying to sell, bulls would come back. So I'm thinking if the trading range behavior is going to carry on, there's a possibility that they will be selling today. And as I said, it's only midday my time. So I'm still here until the open of the US session, a couple more hours from then. So for another good 5-6 hours, I can sit and wait and see if this trading range forces hang in. If they do and stay, and we're going to sell off, then I will look for those opportunities to sell off. Okay, so that's good. That's kind of good in terms of my thinking. Another market that's going to be pretty interesting for me as time unfolds today is the US session. Okay, this will be the last active session in terms of exchanges for the day before the week ends. The US market opens late, so you can always expect huge volumes coming in. But again, have a look at it. By the way, it doesn't matter which time you trade these exchanges. There's opportunities anyway. The US exchange hasn't opened, so I'm trading during the European session, so there'll be opportunities. So even in the Asian session, you will find opportunities to trade the market. So again, at the open, there was the open. Followed through by this candle, low test, bulls closing above. Then we had a trading range open. And again, trading range open. Remember, whenever you have a trading range market going sideways, you got to be thinking to yourself, either when you get to the top of the trading range, the market will reverse and come back into the range. Just like I was talking about what I'm expecting to see happening on the daily on the UK 100, so I can sell for the rest of the afternoon. So, and if it gets to the bottom of the trading range, you kind of expect that the trading range forces will hold and the market goes back up again. So trading range, and I'm waiting to see if the bears sell off, stayed with this rapid breakout, couple of candles. And I'm thinking, well, okay, let's see what kind of pullback we get. Get pullbacks inside candles, bear candles, and we get back to the EMA. I'm thinking, okay, good bear candles, but the top of the range is just here. If I was to sell that with my stop down here, I'm not going to get 1-to-1. So if you're still selling, first reversal, you don't put your stop here. Your stop is going to come, at least the beginning of the breakout. So go wrong way around. So if I'm buying there and I'm putting my stop here, to get at least 1-to-1 possibility, the market will have to go there. So I figured, you've got this huge bull candle and the bears have reversed almost 2/3 of it. Chances of getting there are not there. So I'm not going to take that. I'm going to wait to see if I get a breakout, another pullback. Bulls broke out, but then immediately they failed. So now we have a trading range pullback yet once again in this market. Now, why do we have a trading range pullback? Well, it simply means, although the bulls gave us these two candles, this one has been erased. So really, they gave us this one breakout candle to get to the top trading range. So all of that is trading range. Trading range down here, one candle breakout and trading range. All it means is that although the market is gone up from the open, there is two-sided price action. There's a lot of fighting taking place. So you can still wait. If you want to go longer, wait for the bull breakout, pullback. But if this trading range holds, so far I've got 1, 2, 3 attempts, and the bears start to sell off and give us a reversal pattern, I'll be very happy with that same example that I gave you of seeing, if we can get down at least to the open and maybe a little bit lower. So I'm pretty bearish because of the trading range behavior that we have so far. Then a quick look on the daily. Now this is interesting. So why are we getting a trading range if the bulls have been so strong on the S&P 500? Let's do this a little bit. Why would that be taking place? Well, it's taking place because of the bears here. These bears, when the bulls accelerated up, these bears that sold off, they tried to reverse the market here. So the bears that eventually sold off tried to reverse the market here, and they failed, okay? The bulls broke out, small breakout, doji, had a follow-through candle, and despite their strength, beginning of the week, so, today is Friday, 5/4, that's Wednesday, doji candle. Why do you have a doji after such strength? Then we have, a low test candle, an opportunity to accelerate. But why are we not just accelerating? Well, the reason we're not just accelerating is because of what took place way back here. Bears sold off, allowed a pullback, and sold off again. So these bears are still trying to defend the market. The bears that created that whole sell-off there are the ones that are trying to make the market fail. Now, the good thing about being here is if the bulls do take off, there's going to be huge acceleration and opportunities for us to be able to jump in on pullbacks and see if the market can go a little bit further. But we're getting warning signs already that there is a lot of defense by the bears. So you got to remain open to the possibility of the market reversing. So don't rush to get in until you actually get a decent enough setup to trade. So this sideways price action is what's kind of liberating, affecting the market. Another thing I want to quick have a look at before time goes, because it's a Friday. If you are in the market, we're going to use the same chart, and I'll go back to the UK 100 very quick. So I'm not in any trades on any chart. So I'm just showing you what I'm waiting for. Because it is a Friday, you got to pop up your weekly chart and just have a look, and at least look at the most recent weeks. So there's no problem as far as the market is concerned with what's happened this month. We are way above the high of last week. So that is a level of support. I mean, some catastrophic events happens and the market sells off. That's might be a level that's might be defended. So the bulls have been pretty strong, after the reversal that took place 3 weeks ago. They put a close above these levels. So these levels were levels of resistance, and now they're accelerating up. Nothing has stopped them along the way. These are the levels that we have spoken of. You can mark them on your chart if you wanted. Let's say you could say it's probably not necessary, but you could. What is more important when you trade in the lower time frame is the most recent weeks. So these levels here are now just levels that could be on the monthly or something. Chances are, well, they may not say we won't, but chances we may not get to test this previous lower high in the monthlies. So nothing on the weekly that should be bothering us as far as this market is concerned. On the UK 100, and please, I know I've got a minute to go. You must do this on all the charts that you're looking at. Go to the weekly. So 2 weeks ago, we had this high here. So if you were a bull, you got to make sure that at least close above the high of that week, 7482.31. Okay, so at least the bulls are saying in this particular period that we're in, we want to get above that particular high. So if you go back to the 5 minute, you can see we've just got this trading range that's taking place. So part of the fight that's taking place, and that's the point I want to put across on a lower time frame chart on a Friday. It's not just the normal daily forces that are in play. It's also the weekly bulls and bears that want to make sure the market closes at a certain level at the end of the week. So just keep that in mind. Now, the reason I take it off, already we've kind of breached it. So I want to clutter my charts. I can see that the market is creating a trend range in this level. So I know this level is important. So, you can just take it off as long as you've kind of seen it. All right, guys. So deliberately, we are waiting to see what takes place with these trading ranges, whether we get reversals and opportunities to sell back. If not, if it keeps on ranging and trade ranging, absolutely nothing to do. One of those days where you say, well, I went to work, didn't lose money, didn't make money, so I can carry on. Thank you, guys. Have a great weekend, and we will talk to you again next week. Marlon, sincerely appreciated, man. And thank you very much to everyone. No questions. Take care. We will see you next week. All right, then. Take care and bye-bye.